Thank you for coming out. I've been speaking here for 12 years in a row. I've given lots of talks about the coming super cycle and why these metals had to go up in price and why the U.S. government and other governments had a secure supply. I'm going to skip all that stuff. I'm also going to skip telling you that you should take profits off the table. I've heard a lot of those talks in the past couple of days. I think it's time to make some money. We've been making some money in the even in the bear market in the past couple of years, investing in the way I'm going to tell you about today, which is private placements. So that's the cat crawling out of the bag here. The senior way to invest in juniors is via private placements. I'll talk about how we've done that, what they are, how you can do them if you meet some certain criteria, and then I'll talk about some of the deals we've done and what we've got planned next. A big thank you to Jay Martin and the team for inviting me again for putting on this event. It's always a big endeavor to have a conference like this and herd all these cats, as Mr. Rule says. So thank you to him, and thank you to all you guys for coming out. Just quickly about me, some of the websites I publish. I own Resource Stock Digest. I own Digest Publishing with my partner, Gerardo Del Real. I should have put the podcast on there. That seems to be what people recognize me the most for these days. It's called Investing in Bizarro World. It's got a fast-growing readership, and we've got a paid component where you can listen to us shoot the shit, excuse my language, every week and talk about stocks we own and things we like and deals that we're doing. I wrote a couple of books back in the day. You can see them there, and I was also very fortunate, thankful to take over for Mr. James Dines once he left us in 2022. So I've been stewarding the readers of the Dines letter since then, and they seem to have had a good go of it. I've heard and seen from a bunch of those folks, and they're always good to talk to, and talk to some folks before I came up on stage that are members. So thanks for you guys for showing up as well. Right into it. This is the best private placement we've ever done. We had a 11,000% return. That's 110 times your money. It turns every $20,000 invested into over $2.2 million. And we did that. We've got the receipts, we've got the emails, and our investors and our subscribers did that as well. That was a deal called, well, I'll tell you in 1 second. 4.45 million is what you could have made with the warrants. So we first financed it at 16 cents, and that came with full warrants at 25 cents that we then ended up exercising well into the money. So with an initial $20,000 investment into this single private placement, you could have made $4.45 million. There was a company called, back then, well, the first time we financed it, I think it was called Gaia Metals, and then it changed its name to Patriot Battery Metals, and it's now called PMet Resources. It's not even on the TSXV. It graduated to the TSX. So we first financed that at 16 cents. They made a very robust, world-class lithium, cesium, tantalum discovery in James Bay, Quebec, and went on to peak out at $17 before the lithium market sort of peaked out there in 2023, and lithium carbonate did a round trip from $80,000 a ton back down to $8,000 a ton, and as you might have seen recently, it's back up to, I don't know, $22,000 or $23,000 a ton, and Patriot Battery, or PMet, is a $7 stock again. So that's sort of the best deal we've ever done, but we've done many 10-baggers and multi-100% winners over the years. What is a private placement? Well, if you type it into AI, that's what Google will tell you. I'll read for just a second. It's a private placement, is a transaction where a company sells shares of stock to a select group, note the highlights there, of investors, instead of selling them on the open market. These are exempt from the requirement to file a registration statement under the Securities Act, at least in the United States. And issuers have fewer disclosure requirements than those who sell securities in a public offering. And these are regulated in the United States by the SEC and here in Canada by the Canadian Securities Administrators offices, Ontario Securities, BCSC, for example. And I guess furthermore, I'll talk about this more in a second, but this is how the quote-unquote smart money invests. Like if you happen to listen to Ross Beatty and Rick and Bob Quartermain this morning, you would have heard Rick say a couple of things. It wasn't even the point he was making, but he was saying, I remember, Ross, when we had to exercise warrants to get $300,000 in the Treasury. I heard him say that. Well, you don't get warrants unless you're investing via private placements. And then I heard him say to Mr. Quartermain, I remember when we did early private placements in your deals. So, this is how the whales or the sharks or the smart money in the space is investing in. And one of my missions over the past couple of years has been to bring those deals to the quote-unquote retail or the common investors, of which I am one, right? I started doing these deals 10 years ago and have a pretty good run of it over the past decade. What these deals are not, they are not Reg A deals or crowdfunding deals or private deals that stay private forever and you can't get liquidity or you can't sell your shares because they're private and they're not on a public exchange. This is not crowdfunding. This is not Kickstarter. This is not GoFundMe. This is private placements into public equities. They're either already trading or they're about to IPO. I'll talk more about that in a second, but these are not private forever, and these are very much real companies. Again, exempt securities, Regulation D and S in the United States, already public. So, but essentially it's private capital on the public markets, venture capital on the public markets. These are deals. This is how companies raise money, and they do it cheaply because they don't have to file a prospectus and hire lawyers to write the prospectus, et cetera. And that's why you've got to be an accredited investor, and that's why they're exempt securities. These are already public companies trading on either the Toronto Stock Exchange, the TSX, or the TSXV, the venture portion, or the CSE, the Canadian Securities Exchange. And we do a bunch of different types of deals. So they're either already public or they are doing a reverse takeover, an RTO, or they're a CPC, a capital pool corporation that's doing a qualified transaction, and then we'll start to list and trade after it closes that qualified transaction. Or they're strategic shifts, right? They're a company that was a gold company 10 years ago, that was a crypto company, that was a cannabis company, and now they're going to work with a new set of investors, roll back and restructure and go after some new endeavor or some new asset, some sort of strategic shift. Those are the types of deals that we get involved in. They're early stage, they're pre-revenue, they're high risk, and they're often very low valuations. Sometimes, we just did a deal in a capital pool corporation that currently has a market cap less than $1 million. And we look for these low valuation deals, $5 to $30 million market caps that have a chance to re-rate once we fund them early and they get out and start doing what it is they're doing. And the sectors that lend themselves to these are sectors where they're not already generating revenue. There's no sales, right? So they can't reinvest in their own business. And that lends itself primarily to natural resources because you need to raise money to drill and explore and acquire land, et cetera. But we've also done deals in medtech and biotech, and the cannabis run in 2016 and 2017 was certainly fun. But primarily mining, I would say 80 to 90% in the natural resource space. Think back to the slide that has the highlights on it. A private placement is when a company sells shares to a select group of individuals. Well, what is the select group, and can you be a part of it? So on the one side there, you'll see that you've got to be an accredited investor. This is true both in the United States and in Canada. You've either got to have individual income over $200,000, or you've got to have, with a partner or a spouse, over $300,000 of income or a net worth over $1 million. Either or, you don't have to have both of those things. There's some other exemptions that you can have. There's some friends and family stuff. You can have a securities license that allows you to get in these deals. But basically, the government, in all its wisdom, wants to make sure you have enough capital to quote unquote lose, though we certainly don't plan on losing capital. Who are members? So we do this through a newsletter called Private Placement Intel. It's gone through a couple of iterations. I was with a publishing company long ago. It was first called Nick's Notebook, and now it's called Private Placement Intel. I run it with my partner, Gerardo. We source deals together. We invest in these deals alongside our members and several other people. So we count Doug Casey as a member. He's on the subscriber rolls. He's publicly given interviews where he said that he sources private placements from us. Bob Bishop, some of you might remember as a very well-known and astute newsletter writer from years ago. And then typical clientele we've got a lot of former brokers, a lot of former money managers or current money managers like RIA folks that are sourcing deals for some of their own clients. We've got medical professionals, business owners, and we've done some deals with Rick Rule along the way. You might have seen, I did a big video with him back in November, so we've started to fund a couple of deals right alongside Mr. Rule. And what are the benefits of investing this way? Well, That timing is a very important one because we come in very early stage, sometimes at the pre-IPO level or when they're doing an RTO, sort of what I already explained, right when they're doing a qualifying transaction, for example, or they're doing a restructuring. So we're coming in early, oftentimes before the company has started to execute on its business model and with catalysts ahead. So you'll listen to a lot of these companies talk, and I don't know if you guys were at MIF the past couple of days, but even companies here will say some of the same things. They'll talk about their NPV and their IRR, and it gets very murky, at least it was for me as a young retail investor trying to determine what the value was and are they going to get re-rated, which one should I buy? Well, these were coming into early, before they're on the stage here largely, right? Before the market knows what they are. So you get the benefit of timing and investing alongside the smart money and investing alongside the management of these companies when they're writing their initial checks and continuing to fund the company. We're participating alongside of those. Another benefit is pricing, right? You get to come in at a discount. Even if the company is already trading, there are rules in place that allow the company to price private placements at a discount. You can see what the discounts are there. If a company is trading up to 50 cents, you can trade it at a 25% discount. So you can already start ahead of where people are buying it in the public market. And then these deals often come with leverage in the form of warrants. Half warrants or full warrants that allow you, but don't require you to buy more in the future at a fixed set lower price, right? And think back to the example I was talking about of PMET Resources. We had warrants at 25 cents that we could exercise when the stock was trading at $15, right? And it's like an option in that way. You can let them expire. If the stock doesn't go up, there's no downside risk. And there's also little counterparty risk, which is something we talk a lot about in the gold space and the crypto space, right? So if you're buying shares now in a bull market, you're buying them from somebody, right? Somebody's selling the shares. That's what a market is. You've got a bid and you've got an ask. Well, a lot of times the people on the ask side are asking against your bid because they own shares at a lower price, likely because they bought it at a private placement. So you're coming in ahead of those folks. Just a couple of examples here with a couple of minutes left of deals we've done recently and the performance they've driven. So one is Kingsman Resources. You can see we started to fund it there in October 2024. We did a private placement at 25 cents that came with a full warrant at 40 cents, valid for 2 years. Bull market starts to unfold in 2025. Shares go up to 75 cents. The company raises more money. We may or may not participate in those subsequent rounds. We try to get in ahead of them doing larger capital raises, and then they try to bring in other investors down the line to fund more robust expansion and exploration, et cetera. And then the company uses that capital that they raised to drill. They have a couple of projects in Chihuahua, Mexico, the Parral Mining District, past producer from Sarco that never mined or drilled really below the water table, 250 meters. Kingsman starts to drill. You can see what they hit there, 1,028 grams per ton silver, over 1.45 meters. Shares go to over $2.40. And that's the outcome from the original private placement we did. Shares are up 880% in 15 months from the first financing. Warrants, which we haven't even exercised yet, are already over 500% in the money. They don't expire for another 10 months. I believe in November of this year, those warrants expire, so we can exercise those. And we still have more catalysts ahead with funds in the Treasury to continue to do more drilling. Another example here is Dara Gold. This was a capital pool corp. I believe it was called Dara Capital before it did its qualifying transaction. And we participated in that concurrent financing with the qualifying transaction there. In January 2025, that private placement was done at 6 cents. It came with a full warrant at 10 cents. And then the halt came off. It started trading as Dara Gold. This is a company that its main asset, Antonella, is in Peru. It's right alongside Highlander Silver's asset, which some of you may know. Highlander Silver's got $1 billion market cap now, right? Drilling out high-grade silver gold veins down there in Peru. Dara has been able to prove that those veins in some areas go right onto their property. The market starts to figure this out. Dara is reporting that they've made a new discovery of high-grade epithermal gold and silver. Shares go to over 40 cents, and they take the opportunity to raise $7 million. And now they can go about their exploration campaign, waiting for permits in Peru. And in the meantime, optioning another property called Cerro Bayo from a company called Latin Metals that they'll be able to drill this year because it's already permitted and has the targeting work done. So the outcome from Dara is we're up 600% in 12 months. The warrants are 300% in the money. They don't expire until 2027. And the last line there is just what I said about being adjacent to Highlander Silver and optioning the new properties. So, we're not thinking about what's the NPV of Dara, what's the IRR, when should we buy stock? We're coming in at the early life cycle of these deals before all these catalysts unfold. Third example here, Kincora Copper. We did this alongside Jeff Phillips and Rick Rule. That was publicly disclosed in the press release. This is sort of a special situation or a strategic shift that I was talking about earlier. They had a bloated share structure, rolled it back, brought in new investors, and now they're deploying a hybrid prospect generator model in Australia with several projects already JV'd out to majors that have something like $100 million in funding commitments to option into those projects. The deal needed shareholder approval. That came last summer when Trump was slapping tariffs on copper and copper started to go crazy. And shares have done what they've done there. So financing it at 30 cents with a full warrant at 50 cents for 3 years. And shares have already been, up to $1.50 or so there, up 300 and some percent. Just in 6 months, 3-4 baggers, warrants 150% in the money. And now they're funded to drill the self-explore a project if they so choose, while their partners are executing on the JV option deals. And then the last example I have, North Shore Uranium. So another point is we do this across the spectrum, right? I'm not giving talks now about, I think it's copper's time, I think it's uranium's time, should I invest in silver? The answer is yes. Like, it's a commodities bull market. These governments are investing in antimony and gallium and things that nobody knew about 3 and 4 years ago. Like, there's opportunities across the board, right? So, and uranium is one of those opportunities. So, and we've had good success in uranium over the years as well with different deals we've done. And the most recent is North Shore Uranium. We financed at 5 cents a share last August with a half warrant at 10 cents. They have an asset in the American Southwest called Rio Puerco that's got a historic resource on it, some 11 million pounds. It was essentially a mine that was built by Kerr McGee back in the 70s. They sunk the shaft, all that stuff, and never mined a single pound because the uranium market tanked. So just a uranium mine that's been sitting there for longer than I've been alive that North Shore is going to go back into and do a couple of things. Likely prove that it's ISR amenable is the strategy they're taking. They brought in a director named Blake Steele, who we had great success with before, having funded a company called URZ Energy, then merged with a company called Azarga that was run by Blake Steele that had an asset called Dewey Burdock in South Dakota. And they ended up selling that asset to Encore Energy, and we exited that company. Everybody made 7-8 times their money. That same director, Blake Steele, who was able to get Dewey Burdock's license in good standing and was able to make that exit, has now come on as a director of North Shore Uranium, and they just raised $3 million more bucks, and they'll start drilling this year. That project, by the way, Dewey Burdock that I just mentioned, was one of the first 10 projects selected under the Fast 41 permitting framework that Trump is advancing, right, to get fast-track permitting in the United States. So we're doing real deals. We're funding real deals, companies that are going to produce the next round of commodities and energy metals, in that case uranium, and making smart profits along the way. What else do you need to know here in the last 90 seconds? There's different kinds of private placements. There's brokered deals, there's non-brokered deals, there's bought deal financings, there's three-cornered amalgamations, there's subscription receipt financings. We can help you navigate all that. We're not doing a lot of brokered financings, right? I've heard some not so good stories about folks who just do deals that their brokers give them. We're not taking deals from brokers. We're working directly with these companies to source the deals and doing non-brokered private placements where we're raising the capital, not some boutique shop or some brokerage house. You do need a broker. To get the legend off, there's some complexities there, right? You've got to hold these shares for 4 months. They come with a legend that you have to get removed. Some people would call it onerous. I would say if you're making 500% in 3 months, I'll happily sign a couple of forms and use the snail mail to get some things done. Lack of access, right? You might not have known that these existed, or you've never been invited to participate in one. That's the gap that we bridge. We provide the access to these deals. We're not getting paid to do so. We're not taking finder's fees. We're not taking options. We're participating alongside our subscribers in these deals. We make money from our subscribers. You pay a fee to us on an annual basis to get access to our deal flow. Why would you do that? Well, liquidity can be an issue, right? If you're trying to build a large position in some of these companies, they can be illiquid. They don't trade a lot, but you can buy in size in a private placement and be able to get the position you want. And the last slide here, if I could just take an extra 30 seconds, is I'm not cherry picking the returns, right? I just went through 4 examples. Sorry, that's a little small. Take a picture and use your 2 fingers to zoom in on it if you'd like. But that's the entire track record of every open deal we've done since 2017, and the average upside is over 400%, as you can see in the bottom right box there. So there's all the winners are highlighted in green, and you can see there's only a few losers there. And many of those deals have warrants that are now in the money that we'll be exercising for the next couple of years. So private placements for many of our subscribers have been a game changer, a life changer. I know because I see the testimonials. I hear from people that are calling into our customer service department. And so we do this through private placement intel. We're offering this service to 250 people. We're at about 200 subscribers on this letter right now. The reason we do that is because if we get much larger than that, it's tough to find deals big enough, right? If we're dealing with tiny 5, 10 million market cap companies that are only raising $1 million, $2 million, $3 million, we can't invite the world to participate because everybody's not going to get the level of allocation they want. So we're keeping it small. We're keeping it tight, just like the share structures that we look for in these companies. I appreciate you guys coming. Standing room only means we're in a bull market. That's pretty crazy. Privateplacementintel.com or Digest Publishing or Resource Stock Digest or Investing in Bizarro World. Thank you for your attention. I hope you have a good rest of the conference and a great bull market. Thank you very much.